Hey everyone, it's Monday morning, December 16th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Çela. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. We're heading into a big week with major central banks making their final moves for the year. We've got the Fed, the Bank of Japan, and the Bank of England in focus, along with global PMI data and oil market dynamics. Let's jump right in. Before we begin, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. First up, the Fed. On Wednesday, they're expected to deliver their third straight 25 basis point rate cut to wrap up 2024. That's already baked into the markets, but the real question is, what's next for 2025? We'll get a glimpse into the Fed's updated economic projections, which could hint at the pace of cuts next year. Fed Chair Jerome Powell has said the economy is stronger than they anticipated in September, which might mean a slower pace of rate cuts moving forward. But inflation is still in play, and Powell will likely repeat his caution. If inflation ticks up, cuts could slow. If unemployment rises, cuts might speed up. It's a balancing act, and the markets will be hanging on every word. On Thursday, it's the Bank of Japan's turn. There's been a lot of back and forth about whether they'll hike rates again or hit pause. Right now, the consensus seems to lean towards holding steady, as policymakers wait for more data on wages and Trump's policy direction. That said, there's always room for surprises, and any unexpected move could cause volatility, especially in the dollar-yen exchange rate. But honestly, with the Fed so likely to cut rates this week, it would be pretty unusual for the BoJ to go against the grain. Also on Thursday, the Bank of England is expected to keep rates unchanged at 4.75%. They're likely to hold off on any further cuts until February, even though recent data showed the UK economy contracted for the second straight month in October. Retail sales are flat, business activity is weak, and growth forecasts for 2024 have already been trimmed. Still, the Bank of England seems confident enough to wait, especially with stronger growth expected in 2025. Next, let's talk PMI data. This week's numbers will give us fresh insights into the global economy. November's data showed manufacturing sluggishness spreading to services, with the Eurozone composite PMI falling below the 50 mark, meaning contraction. Finally, oil. Prices climbed to a 3-week high last Friday, with Brent up 5% for the week and WTI gaining 6%. A combination of tighter supply concerns and hopes for stronger demand thanks to lower interest rates is driving the rally. The EU has just agreed to its 15th sanctions package on Russia, targeting their shadow tanker fleet, and the US might follow suit. Plus, with the Fed and ECB cutting rates, there's optimism that economic growth and oil demand could pick up in 2025. And that's your quick look at the week ahead. From the Fed's final decision of the year to the Bank of Japan and Bank of England meetings, plus global PMI data and rising oil prices, it's shaping up to be an exciting week for the markets. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Çela, and I'll catch you tomorrow morning with a brand new Quickie. Have a great day, everyone.